who is the caregiver, all right? And buy accordingly.
So if I'm single, then I have to go for the most expensive one. Someone have to look after me already. Right. Welcome to another episode of 10 Must-Know Insurance Tips Agents May Not Tell You. I'm Jayla, Experience Specialist, and this is Eddy, CEO of Haven and our favorite insurance expert. At Haven, we believe that insurance advice should be easy to understand, not complicated, and always aligned with your needs. I'll ask the questions that you've always wanted to ask, and Eddy will answer them with no jargon and no fluff. As a layman myself, I promise I'll keep asking until I get it. I hope this episode helps you make wise insurance decisions without overpaying for coverage. So without further ado, let's dive into today's episode. So today we will be talking about CareShield Life and long-term care planning. So the first question I have for Eddy is, in my friend circle, there's a lot of them has been, turning the age that you are required to have a CareShield Life. So my question will be, what is CareShield Life, and is it really something important for people turning 30 to have?
Okay, CareShield Life started in 2020. All right, it's a national scheme to provide for insurance coverage when one is severely disabled. All right, so severely disabled basically means that the person is unable to perform 3 out of 6 activities of daily living.
Okay.
The 6 activity of daily living basically feeding, dressing, toileting, showering, transferring, and moving around. So when a person is not able to perform at least 3 of these 6 activities of daily living, this person is not independent. He really needs a caregiver to help him around in the day-to-day things.
Okay. So basically, CareShield Life is to provide you with, I would say, assistance with long-term care needs. Is that correct to assume?
So CareShield Life basically provide a payout,
Okay.
on a monthly basis to help to defray this cost of caregiving.
Okay. So there is long-term care and there's also medical insurance. Are they the same thing or are they very different?
They cover different things. Yes.
Okay.
They are same coverage, similar coverage, but covering different things. Okay. For CareShield Life, I mentioned, is basically to help defray the cost of caregiving. The cost of caregiving can include many things. It can include things like medications for the severely disabled, bringing him to a doctor, all right, or transportation and making modification to the house. Okay. So these are costs that the long-term care insurance can help to defray. Okay. For hospital insurance, and usually that refers to Medishield Life or integration plan, it is a coverage when a person needs a hospital treatment or outpatient treatment. So for example, would be things like cancer treatment, chemotherapy outpatient. Okay, this is where the hospital insurance can come in. But for CareShield Life or long-term care insurance, it is meant to pay out cash in the event the person is unable to perform these activities of daily living.
Okay, so medical insurance is, let's say, if I go into a hospital, I got checked into the hospital, and then I can claim with my medical insurance. Then for the long-term care, it's more like you mentioned earlier, a monthly payout to assist with your whatever that you might need for you for someone to take care of you, correct?
That's right.
Okay.
That's right.
Then for the amount of what is actually the CareShield Life providing, right? Is it enough?
Okay, firstly, the CareShield Life, because it's a national scheme, it is meant to be affordable for everyone.
Okay.
So what it means is that the coverage is not very huge. At this year, the CareShield Life benefits is at 662 per month. If a person is suffering disability, all right, this year, right, the CareShield Life pays 662 per month for as long as the person is severely disabled. All right. But this amount is actually increases with time. So for example, it's meant to increase about 2%. So next year,
every year, not every month.
Every year.
Okay.
So if let's say the disability strikes next year, all right, so the amount could be about $675 per month, and this will continue to increase depending on when it starts. All right, and because it is meant as a national scheme, it is sized at a very basic level. How much is enough then? According to Singlife long-term care studies published in 2024, it estimates that a person will need about $2,952 a month.
$2,952
$52 a month.
A month.
Yeah, that's about $3,000 a month. and this amount will take care of costs like the medical medicine. Medication, transportation. Yes, some living expenses and some caregiving, therapy and stuff like that.
Is this 2,900 on the research everything?
Not everything. It's just
still need more.
It's just an average. It really depends on the expectation.
Oh,
alright?
Okay.
Because if a person expectation is to have a dedicated person to step in, like a domestic helper, to step in full time, the cost will go beyond $3,000.
So 2.9 is the basic.
Yeah. And if, let's say, suppose the disability is so severe, the family couldn't support it, then the next option would be to send to a nursing home. A nursing home, there's a wide range in the cost of nursing home. It could range about $4,000 or $5,000, all the way to as much as $11,000 a month.
A month?
Yes. So it's wide ranging, depending on expectations. So it can be very expensive if you're not considered in part of your planning.
Yeah. Okay. Then, because you mentioned earlier of the CareShield Life is a national scheme, right? So the amount won't be so much, and minimally we need 2.9K a month to support if in
average.
If we have we need long-term care. Is there any way that we can enhance our CareShield Life coverage?
So there are really two ways to think about having sufficient cover for your long-term care. One way is to self-manage it, self-insuring. So what's self-insuring basically means that you focus on building your assets big enough, managing the growth of your assets, such that when disability events strike, long-term care events strike, you can actually pay for it on your own savings.
Okay.
Right? The problem with this approach is that if, let's say, disability strike very early on, the assets may not be, don't have the time to grow, to absorb it. All right. The other way is to buy an insurance. For this case, CareShield Life supplement, to sit on top of the CareShield Life to boost the coverage. Okay. To amount that is sizable to for the person.
Okay.
All right. So currently there are 3 companies that are offering CareShield Life supplement: Singlife, Great Eastern, and Income. You can cover up to $5,000 benefits per month. With each of the insurance companies.
This is including the CareShield Life already, 5,000 or 5,000 plus 600.
It depends on the plan, but it can consider on top of the plans.
But is there a max?
About $5,000.
Oh, max
per insurer.
Per insurer. Oh,
yes.
So I can buy from NTUC, GE, Singlife.
Or you can buy 15,000 from 3 companies.
Okay. Then
right.
Like this, that means let's say if touch wood something happened during 40 or 45. I get 15K a month.
That's right.
With long-term care.
Yeah, but of course you may not need so much.
Oh.
Okay, it depends on your expectations,
Okay.
right? So the idea is that you can actually, there are these companies that actually provide supplements for you to stack on top. Okay, and depending on your expectation, because every insurance company will have different variation. All right, you could have one that is the benefit is flat, or benefits that can be increasing to mitigate inflation, or you can have one that is more lenient definitions. Instead of requiring 3 ADLs, activity of daily living, there are plans that are offering 2 ADLs, more lenient definition.
But the premium will be different.
The premium will go up.
Everything will depends on how long and how much.
Yes.
Of course. Okay.
Yeah. So at Haven, what we do is that we find out what is expectations. So perhaps it could be having a nursing home provision, so about maybe $4,000, let's say. Okay. Then we look at what is a shortfall after minusing off CareShield Life, and then we use a supplement to go for it. Typically, we will go for the standard 3 out of 6 ADLs, because that's why considered severe disability, and it's actually a cheaper form of insuring. All right. Then if, let's say, you have extra resources, you want to go for more lenient definitions, escalating, then that's up to you. I mean, it really depends on your ability as well as your requirements.
Okay, understand. Okay, that's so I can still, when I reach the age, I can buy all 3, and it depends on how much. Wow, that's a lot of money. 50K a month is a lot.
That's a lot. Yeah. So probably you don't need so much at this moment. Okay, but the thing about long CareShield Life supplement is that you can use up to $600 per year from your CPF to pay for it, and the balance will be
so it'll
through
be very
cash.
cheap lah.
The
other
cash portion
words,
could be
low.
manageable.
But does the premium grow like you said? The payout grow? The premium?
For CareShield Life premiums, it will grow because it will increase 2% every year, right? That one is taken care of by the CPF.
Okay.
All right. The supplement, depending on the plan.
Okay.
You can actually, if you choose a flat plan, the premium will be fixed. If by your point of buying 5,000 for each of the 3 insurance company, well, if your needs is so huge, you have the resources, that's fine. But for most people, maybe that is not necessary. But what's important is to find out what you need.
What kind of lifestyle I want? What kind of care I want?
What kind of long-term care expectations?
Yeah, okay.
Who is the caregiver? All right, and buy accordingly.
So if I'm single, then I have to go for the most expensive one. Someone have to look after me already, right?
It's probably so. Yes. So yes.
Bo pian lah, to take the most expensive one.
So actually, the question is. It really depends on your needs and
we'll
affordability.
Take that into consideration
Needs and
as well,
affordability,
correct.
right? Because there are also other forms of risk that you cover. So you need to.
Everyone
look at
is
it
different lah.
completely,
It's very customized towards their lifestyle and needs to the plan and the premium.
Yeah.
Understand? Okay. What about disability income? Is it because income, long-term care? They sound like, is it the same? Are they the same kind of plan? What are the difference?
Yeah, it's same but different. Disability income insurance is basically for those who are working, all right? Okay. And actually, only those who are working can buy this plan. Homemakers cannot buy this kind of plans. Okay, it is meant to protect the ability to earn. If the ability to earn is affected due to accident or illness, and therefore the person cannot work to earn income or have to go for a reduced capacity, all right, whereby the incomes drop, this disability income will actually pay out additional payment for this person to replace the loss of income. So for example, if let's say a teacher, the teacher depends on the voice, the ability to talk, to communicate, to teach. But if let's say the teacher is unable to talk, right, and therefore has to assign to a more admin role. Right? For this role, there's a reduction in the salary. Okay, this disability income will actually pay an amount to compensate the loss of income. For disability income plans, you can cover up to 75% of your last drawn pay.
Oh, okay, that's good.
Yeah. So I mean, that's important because
on top of the additional income that, let's say, the teacher is still getting from the admin job. Together. Oh, yeah. So they will
totality.
Top up the difference.
Yeah. Yes.
Okay.
All right. So the whole idea is because income is actually very important for accumulators, for people who are starting out, because income is your assets to grow your wealth, to grow your savings for all your future needs. Right? So protecting this income is very important. So DI, disability income plan, is meant for this group of category.
When I'm working.
Yes, working. In fact, this plan will terminate at age 65. Yeah. So for long-term care, it actually covers. It doesn't depend on the income. Homemakers can buy it.
Is 65 years old default?
It's a maximum age you can cover up to.
Okay.
Yeah.
But can be younger also?
Yes, you can cover up to 50, 55, 60, 65. Yeah.
Okay.
Because it's meant to cover during the working years. It's not meant to cover for life.
Okay.
Yeah. So long-term care, on the other hand, it is not depending on your income. Okay, because it is not meant to replace your loss of income.
Okay.
Long-term care is to provide income to defray the cost of caregiving costs.
Okay, like my assets lah.
Yeah, so it doesn't constrain by age 65. It is actually perpetual. I mean, for life. For life. Okay. So disability income plan is to protect the loss of income, the ability to earn the income.
Yes.
Right, is to protect that. Okay, and this is more so for people who are working, early accumulators when you're starting out. Okay, where assets is not huge. Okay, long-term care, on the other hand, is more towards retirement planning, because disability, severe disability typically strikes when a person is older.
Okay.
All right. So it doesn't concern about replacing loss of income because by then the person could have retired.
Okay.
Okay. It's meant to provide the cost of caregiving.
Okay. So like this, you mean I don't need to get my long-term
so-
care plan out yet
so
because you
when-
save for retirement.
So right now, what you should do is to buy. You should have a disability income plan to protect your income. All right. Then when you're 30 years old, you need to consider also including long-term care planning.
Oh.
Okay. But when you retire, you can actually drop the DI, disability income plan.
Oh, so once I retire, if I retire 65, it will
You will drop
automatically drop already.
Or you could retire at 50 years old.
Maybe
You can stop.
45.
Yeah.
Then I
could be.
drop the
You
plan.
5 years earlier.
Fine. I was like, fine. Well, but if I retired, I don't lose the income lah. Only if
Yes,
I lost due to disability lah. Okay.
Yes, correct.
Makes sense. So I should get a DI and a long-term care. So the question is, if the teacher loses her voice, she cannot teach. The income payout will come to her already, correct? Every month. But let's say she didn't lose her voice. She lost her leg. Does she qualify for the payout?
It really depends on what is the expectation of her occupation.
Okay.
Okay, if her expectation of occupation is that, for example, she must be able to teach maybe 5 days a week.
Okay.
All right, 9 to 12, for example. Okay, and with the condition wheelchair, he can fulfill all this. All right, then this doesn't pay out. Why?
Okay.
Because it doesn't affect his ability to work.
Okay.
Right? It doesn't affect her income.
Okay.
So this disability is not meant to cover for this situation.
Okay.
If the disability, whether is it accident or illness, is such that he or she cannot perform the main occupation, all right, of teaching, okay, or the requirements of the teaching, okay, then the insurance will pay out.
Okay.
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 Yeah.
So it's the outcome. It's not how it happened.
It's whether the condition is whether is he or she able to still continue doing the
job
occupation that he is employed for.
Okay. Yeah. I get it now.
I mean, he can still teach in a wheelchair, but if it's such that it's very hard for him to travel to take the lift and travel to the classroom to teach,
sense.
Move around.
Then
maybe he may not be able to perform the role that he's employed for.
Okay.
Or if he can't do that, he may suffer a pay drop.
Understand.
Okay? When there is a pay drop of more than 25%, I mean, typically when there's a significant pay drop, this insurance will also pay a partial income to support it.
If there's a pay drop lah. Okay.
Yeah.
Okay, Eddie, I asked you a bonus question.
Yes,
This is
what is
my
it?
personal question about myself lah. So, as an experienced specialist, do I need a disability income insurance?
Maybe I ask back a question to you.
Okay.
All right.
Okay.
Do you need to work, or you already financially independent? You work because you just want
Nope.
pastime?
I know the answer. Nope. I need to work.
Okay. So, are you concerned if there's any disability that will affect you from working? How does it impact you?
Oh. Okay lah. I think I know my answer already.
Which is?
Yes. I think a disability, if it's gonna impact my income in the event that I cannot work due to disability,
Yeah.
I think
so.
yes.
Life is full of uncertainties, right?
That's true.
So it's really important because and income is your ability to earn is actually your greatest financial assets. Okay, because you're able to work, able to get income, you can build your savings, you can maintain a certain lifestyle, build for retirement. Your ability to work is actually your greatest assets, and therefore it's important to protect this ability to work.
Is it expensive
through the DI?
to protect it?
It may not be expensive. Actually, it's quite affordable.
Quite affordable.
Yes,
Not like critical illness.
it's cheaper than that.
Okay. I think it's a good idea. Okay.
Alright.
Thank you very much, Eddy, for answering all my not so difficult questions today, Manageable. So we've come to the end of today's episode. Please don't forget to like, share, and subscribe, and turn on the bell so you'll receive a notification whenever we post a video. See you on the next one.
Bye.
Welcome to another episode of the. At Haven, we believe that insurance advice should be. I hope this episode helps you. Sorry, I hope this episode helps you make wise insurance decisions.
Eating, transfer, eating, self-managing or setting aside, balik. So the activity of daily living have this. Okay,